It is a good day to be talking to you because there's actually a bunch of things that we can manage to cover in this conversation right now. A lot of headlines that you're looking at. Supply concerns, I presume, make it to the top of your radar when you talk about crude prices?
I think this is the first time that the Strait of Hormuz has been shut down in the history of oil markets. So yes, the risk premium, geopolitical risk, everything had to be captured in, and that's the reason you have seen almost 54% move in past 1 week. And the risk premium is going to rise again because almost 20% of global oil supply is at risk. The transit is not happening. So I would not rule out again Brent towards 130, 140 dollars per barrel mark. That situation cannot be ruled out, and it is a chaos, specifically for oil markets.
And that's something that you're looking at. I also wanted to get a sense of what you think in terms of the impact going forward. Of course, this is likely to be a prolonged conflict. At least that's the picture that you're picking up right now when it comes to commentary coming in from leaders and other indicators. So given all of that, what are the kind of targets that you have in mind for the near term? What are the levels that you're looking at also?
I think as far as WTI crude is concerned, I think a risk premium of around $10 to $15 cannot be rolled out immediately within next week itself. So specifically, if you want an exact number, it would somewhere be around 110 to 115 as far as WTI crude is concerned. And if you translate it to Indian markets, I think a move of close to around 11,000, 11,200 rupees on the MCX is what you can probably see if the escalation further happens. Unless all the parties come to the negotiating table, I think the risk premium would further add on, and the momentum would further shift to the higher side. So specifically targeted price 115 as far as WTI oil is concerned.
Absolutely, and the kind of commentary that we're getting in, at least as far as brokerages are concerned, or just in general, the indication that you're getting is that these production shut-ins from here on are actually going to be worsening, especially heading into the next week. Given all of that, when you talk about price levels or when you talk about technical indicators, you do have the prompt spread also widening. That entire potpourri of things, that entire confluence of factors that you have right now, do you think that the crude prices in the next 3 months can really be challenging the kind of perception that we've had thus far heading into this year? Of course, there wasn't a war that we had, right?
If there wasn't a war, crude oil markets were very well supplied. So the escalation of prices and the risk premium at present is purely out of war situation. So if the situation eases, we would see oil prices back to normal levels. But until and unless the situation normalizes, I would see crude oil prices gaining further momentum in the next week. And I don't know when it will stop because it is an event risk.
Absolutely, it is an event risk, and the headlines are just unfolding by the hour, Mr. Malia. But when you talk about gold as well, I wanted to shift your attention to that as well, because there's a couple of factors that right now you're looking at least in this market. Of course, the oil story is very much into play there as well, and that's also something that investors are looking at. But when you talk about gold broadly, you do have a stronger dollar and also indications of a stronger dollar heading into this week. Other than that, there's also higher likelihood when you talk about interest rate cuts as well. Is that something that you're seeing in terms of factors for this decline, or is there anything else that you'll be attributing it to?
I think in general, stronger dollar and commodities are inversely correlated. Given the geopolitical situation, which is out of hand, in an ideal scenario, gold and silver would have gained further momentum. But then these are technical resistance zones, probably where gold and silver both are correcting for the past couple of trading sessions. I think if this further escalates and if there is further news flow from any of these areas wherein the war is escalating, I think you would see momentum in gold prices moving higher. At least a risk premium of 100, $120 cannot be ruled out for gold prices, while if it goes to silver, a risk premium of close to around $10 cannot be ruled out. On the MCX, if you're asking for just for a couple of days, I think 1,60,000 on the downside and 1,58,000 are two support zones for gold, while as far as silver is concerned, 2,62,000 and 2,60,000 are two probable downside zones wherein you can see gold and silver both commodities correction in a couple of days.
Well, absolutely. And before we let you go, I quickly wanted to get a sense of what kind of advice do you have? What kind of words of wisdom do you have for investors who are currently holding on to gold as well as silver, be it in the physical market or through ETFs? Because there's a tale of two triggers that you have right now. On one side, you have safe haven demand. On the other side, a stronger greenback as well, making things a little more complicated when you talk about both of these metals. So given that entire backdrop, should investors stay on the sidelines for a bit, wait for the volatility to subside?
I think irrespective of whether it is volatility or no volatility, gold and silver should be a part of your portfolio. So if you probably missed the momentum and the rally, I would say don't try to time this markets because you will get it wrong every other time. Every price that you see would be an accumulation point, and if there is correction, it gives further opportunity for investors to probably value average your earlier high prices, and you can accumulate gold and silver consistently over a period of time if you are a long-term player in this particular commodities.
Well, absolutely. And in terms of broadly the kind of picture that you have, do you think that safe haven demand can really topple the entire worry on the back of a stronger dollar as well right now, given things as they stand? Because you do have an escalation in the war on one side, like we discussed.
I think stronger dollar and inverse commodity relation plays out most of the time, but then there are situations and circumstances which probably wouldn't matter when it comes to escalation of geopolitical risk. So you'll have to wait how and see how the situation pans out, and we'll see how further the momentum comes in both these commodities.
Well, absolutely. And in terms of the commodities that we've discussed thus far, gold, silver, as well as oil, which one particular commodity are you most bullish on? Or is there anything outside of the list that we've discussed in terms of the one that you're most bullish on right now?
I think, given the situation, crude is the most bullish scenario, and if you're that would be the first on the radar. And apart from crude, it would be silver. And just to give a disclaimer, whatever strategies we have discussed, we do not have any. I do not have any individual positions in this particular commodities, but my organization clients would have positions in some of these strategies given.
No, absolutely. I also wanted to get a sense of what you think about copper as well going forward, because there's been a confluence of factors that you're looking at when you talk about copper. And things are starting to look a little more interesting, a little more complex when you talk about the entire metals complex with this entire dynamic of the war also being factored in. So what is your outlook when it comes to copper then?
I think copper is one commodity which has taken a backseat in all these escalation points. So I think we'll have to wait and watch until the dust settles down, and probably wait for the demand side to catch up for specifically for base metals and copper. But for the time being, I think correction in copper would be the role play, and 1170 and 1160 are the downside targets as far as copper is concerned on the MCX.